The phone line from Srinagar. Good morning and thanks for joining in. Is there any truth to this? Have you been approached by MetLife to divest your stake, to divest the J&K Bank stake in PNB MetLife?
No, basically we have been just doing the idea. We have also started the process of our sale of the stake in Punjab National Bank MetLife, and we have started the early process. And so far, we have not been approached by MetLife. First of all, we will just arrive at the right value, and for that process has been initiated and almost it's in the final stage. And once we do that part, then we will offer MetLife because they have the first right for this stake. And once we do that, thereafter we will go to the person who are interested in in purchasing.
Okay. Mr. Ahmed, you have been quite keen, or there have been reports in the past about you all selling or being interested in selling this over 5% stake that you all hold in PNB MetLife. In the past, the valuations which were, spoken about in the public domain were maybe around 700 crores. Would that still stand, or does MetLife have an option, a predetermined value which they will possibly buy the stake at?
No, I think once we are going for the process for evaluating the right value, and thereafter we would offer that to MetLife on that price. It would not be something like that there would be something predetermined. We have not so far arrived at the right value, but I must also add here that some 2 to 3 years back when we had sold around 5%, at that time the value was say 36.50 per share. For the face value of 10 rupees a share, and this time definitely there has been quite a lot of value addition, and we are expecting better price at the moment. So the valuations themselves for the insurance space have risen, especially for the life insurance space, and post the FDI coming through 49% FDI. So what is the maybe premium that you would like to see on your 5%, over 5% stake, a ballpark internal figure that you might be working with, if you could share that with us? I would say that I would not like to speculate on that, but I think it should be somewhere around, say, 70 rupees per share. Okay, 70 versus 36 rupees that you sold it at in the past? Yes. Okay. Are you likely, do you think, since the process of discovering the valuation is in the final stage, do you think this whole process of selling the stake either to MetLife or any other interested buyer could take place in FY16 and you could recognize the value in this fiscal year itself? Yes, actually, I have always been maintaining that we will be looking for the right time and right price, and once that thing comes, we will do it. Okay. Mr. Ahmed, does PNB have an option besides MetLife? Only MetLife has the first option, but is PNB also interested in raising stake? Or buying out the stake from you? So, I think basically the agreement has been with the MetLife, and we will examine what type of right is available to Punjab National Bank now. Okay. Just two last questions then, Mr. Ahmed. Shaparji, Palanji, are you aware on whether they are looking to sell their entire or partial stake as well? Well, I would not be in a position to say something with accuracy, but we have also been hearing that. Okay. Mr. Ahmed, if the price hypothetically is 70 rupees per share, how much would you get for your 5.3% stake? See, we are holding around, say, plus 10 crore shares, so from that point, I think it should be 700 crore straight. Okay. Okay. All right, Mr. All right, Mr. Ahmed, we'll leave it at that. Thanks so much for joining in. So they have initiated the process of discovering the valuation of their stake. They hold about 10 crore shares. At least it should be about 70 rupees per share. So that should garner them about 700 crore rupees. And MetLife is the first right of refusal. By the way, petrol prices have been cut by nearly half a rupee per litre. And diesel prices have been cut by 1.2 rupees per litre. Just earlier in the morning, remember, jet fuel prices were also cut. Let's slip into a very short break. When we return, we'll speak to Mr. Subbarao, the CFO of CIAT, on the other side.
CNBC TV 18, celebrating 15 years of leadership.
No, thank you.
CNBC TV18, celebrating 15 years of leadership.
Welcome back. Markets still quiet, mid-caps are outperforming, and the stock which is on our radar is CIAT, and that's been one hell of a outperformer in the last year, in the last fiscal year. CIAT has seen a rally of close to about 120%. Let's pull up the one-year chart of CIAT. Okay, in 12 months it's up close to about 82%. So let's find out what the outlook is for FY16. Mr. Subbarao, the CFO of the company, joins in our studio. Good morning, and thanks so much for joining in. Well, we begin FY16, but there are also some disturbing reports about how the market share of Chinese imported tires is at a record high of 18 to 20% versus a normal average of about 8 to 10%. Is there any truth to this, and have you lost market share?
It's true that the Chinese tires presence is growing up in the markets, because particularly in certain segments, like in the case of passenger cars, the taxi market is catching on to Chinese tires. In the case of truck tires or truck and bus also, there is a growing consumption of the Chinese tires, particularly because of the low cost. It is true, but it is not in a threatening position. We have to see how it is, because there is no service element for the Chinese tires. The cost is no doubt low, but the service element is missing for those tires. I don't think the OEMs don't consume Chinese tires. It's only in the replacement market that can have some influence of the Chinese tires.
Okay.
And coming to market share, we haven't lost any market share. All our capacities are completely used up.
Okay. One of the other takeaways, Mr. Subbarao, was that, the Chinese imports will possibly start declining possibly in the second half of FY16. Do you expect that to take place according to you, and do you expect the CV recovery to possibly come through in the second half, and if not, by when?
Yes, CV recovery has been happening in the second half of the current year, so which is this financial year 14-15. So the recovery has been happening. We don't know, the outlook is little uncertain, but the second half of last year, that is FY14-15, the recovery has been significant, almost 40% up in the OEM segment. But we have to wait and see whether it gets sustained. But outlook looks little mixed.
Okay. Do you think that there could be an impact because of the unseasonal rains? Because we've been talking to a couple of the NBFCs who lend, the likes of Shriram Transport, and even analyst opinion has been that maybe there could be a further slowdown because of the unseasonal rains, and maybe in terms of disbursements for used CVs and even new commercial vehicles. Do you think that that would impact the anticipated growth that was there?
Unseasonal rains will not have a permanent impact. It could be temporary impact. But there are positive factors like opening of the mining sector. So that could be a positive sector, huge positive for the commercial vehicles.
Okay. Because the Chinese imported tires are significantly, cheaper than what the domestic industry tires cost, is there pressure on you or the industry per se to cut prices? Have you done so, or are you or anyone in the industry likely to cut prices?
Yeah, there has been a slight price drop, not because of the Chinese competition, but because raw material. So we passed on some kind of
what was the quantum and what could it be going ahead as well?
Yeah, in the case of the commercial vehicles, it has happened about 3% price drop has happened over a period of last few months.
And will you cut prices in any segment going ahead?
Difficult to say. It's all industry competitive action. So nobody can forecast this kind.
And the industry is also not cut price? Only in CVs, okay.
Yes.
Okay. What is your capacity expansion? Because we do understand that it is around at least 35% by Q1 of FY17, so maybe over a year.
Yeah.
Can you take us through what sort of capacity are you expanding and what kind of demand are you seeing in order to maybe service it?
We are setting up 120 tons per day radial plant. It's completely passenger radial plant in Halol, adjacent to our existing unit. That's one capacity. Another capacity that will come into operation this financial year, is Nagpur, the two-wheeler plant. That is another 120 tons per day. 120 plus 120, so 240 tons per day. Capacity will come into operation. I won't say that the entire capacity will come into operation on the day one. There's a ramp up. The ramp up takes nearly 1 year. So it's a progressive capacity utilization that will come with these 240 tons over a period of next 1 year from the date of the commissioning of the operations. It will happen.
Okay.
It doesn't come on day one, the entire capacity.
Okay. We keep talking about crude prices. Generally for your company in this quarter, how would the raw material cost compare with say last year as well as in the previous quarter? Has it come down further?
Yeah, it has come down. It's steadily coming down.
Okay. Even in this quarter compared to the previous quarter?
Yes. Because the crude derivatives, it has not come down earlier. It has started coming down in this quarter a little bit.
How much?
I wouldn't be able to put a figure on this, but yeah, it has come down. It has been positive. But raw material costs, there's been a lot of emphasis on the raw material cost. Raw material cost constitutes about 60-65% of the overall production cost. But the rest of the costs keep going up. And also there are, we have...
So when you talk about rest of the cost, sir, what would you mean?
About 35%. You have your overheads, you have your employees' costs, you have sales and distribution costs. So the inflation keeps impacting those costs. The 35% cost keeps going up by 10%, close to 10% every year. And also the realizations keep dropping. Suppose we are in the export markets. There is a heavy Chinese competition in the export market. There is a little drop. And again, OEM segment, where it's the supply price to the OEMs is linked to the raw material prices, that also keeps coming down. So there are balancing factors on both the sides.
Okay. Fair enough, sir. We leave it on that note. Thank you very much for joining in and talking to us. So that's Siat from the tire space. Let's shift focus to the pharmaceutical space. So we are joined by Mrs. Kiran Mazumdar Shaw to talk about the possible Syngene IPO and when it could even hit the markets. Hi, Mrs. Shaw. Thank you very much for taking the time out and talking to us. There are certain reports indicating that the company is possibly going to file for the Syngene IPO within the next 2 months itself. Can you just confirm or deny this and just take us through the plans on Syngene as a total for the IPO?
Well, you will recall that we had been talking about taking Syngene to the market in fiscal year FY16, and I think we remain committed to that. In terms of whether it's 2 months or whether it is in the first half of this coming fiscal, it is very difficult for me to really give you too much clarity on that. But all I can say is yes, we do wish to file for this IPO in the first quarter of this fiscal.
Okay, so you will file the DRHP in the first quarter, and overall it should get listed in FY16.
Yeah.
Okay, so bankers would have been appointed for the same.
Yes, we are in the process of appointing them. Yes, bankers have been appointed.
Okay. Mrs. Shaw, can you just tell us how much you'd be looking to offload? The last time there were indications of around 10 to 15 odd %.
Yeah, we remain in that same ballpark.
Okay. And are bankers working with the valuation of maybe 3,800 crores? That was the latest transaction that took place for Syngene, which is 10%, which you all sold to a private equity firm for 380 crores?
Obviously, that's the baseline valuation, and when we go to the market, obviously we expect it to be higher than this.
Okay. Can you give us a sense, because since the last valuation of 3,800 crore, it's been close to about 6 months. How much would the valuations of Syngene gone up by based on the financial performance as well and the interest?
It's very difficult for me to give you any indication on that front. But suffice to say that obviously Syngene is performing well, and Syngene has a very good business path and growth prospects going ahead. So obviously the bankers will decide what is the optimal price at which we can list.
Is there anyone, do you have any PE players, would anyone else except, Biocon look to offload a stake in the IPO?
Well, I think you should wait for the IPO before, before I can comment on that. This is sort of almost a closed period for us, and I will not be able to share too many details.
Okay, fair enough. Mrs. Shaw, so I'm just going to steer a little away from that. There was some news about your looking at a 40-acre plant in Mangalore, maybe for some capex. Can you just take us through that?
No, this is about acquiring 40 acres in an SEZ for Syngene's needs in terms of contract manufacturing.
Is it already acquired?
Yes, we have acquired it.
Could you just tell us the amount that you might have shelled out for it?
I won't be able to give you details, but that is not important. I think what is important is that we have acquired 40 acres and it will involve capex to set up a manufacturing, contract manufacturing facility for many of the molecules and products it is developing for its customers.
Fair enough. And Mrs. Shaw, one last question then. Peter Baines being appointed as the CEO of Syngene earlier this morning, that's the news that came through. Would it be in line with the structure on, the Syngene IPO?
Well, Peter has been playing a very important leadership role at Syngene, but in the past he has been in a consultative role, and this is basically formalizing his leadership role as the CEO.
Okay. All right, Mrs. Shaw. We leave it on that note. Thank you very much for joining in and talking to us. So that is Biocon confirming that yes, they are looking for a Syngene IPO and they will possibly look to file the DRHP in Q1 FY16 and a possible listing in FY16 itself. Biocon